Hello everyone, my name is Sigalingging. Today I want to presenting about tax. Tax are people's contribution to the state treasury based on the law, which can be enforced by not receiving reciprocal service, contra-achievement, that can be so directly and which are used to pay general expense. Tax function, budgetary function. Tax are a source of funds for the government to finance its expenses. Regular function. Tax serve as a tool to regulate or implement government policies in the social and economic fields. Tax collection theory. For the first, insurance theory, and then interest theory, theory of resistance, theory of consecration, and the last, purchasing power theory. According to the group A, direct tax, which is a tax that must be borne by the taxpayer himself and cannot be charged or delegated to another person. For example, PPH. B, indirect tax, namely, tax that can ultimately be charged or delegated to another people. For example, VAT. According to the nature, A, subjective tax, is a tax that originates from the subject, namely by taking into account the state of the taxpayer. B, objective tax, is a tax that stems from the object, regardless of the taxpayer's personal condition. According to the agency that collected it. A, central tax, namely tax collected by the government and used to finance state household. For example, PPH, PPN, PPNBM, PBB, and then stamp duty. Principle of tax collection. Principle of domicile. The state has the right to impose tax on all income of taxpayers residing in its territory, but from within and outside the country. This principle applies to domestic taxpayers. Search principle. The state has the right to impose tax on income originating from its territory regardless of the taxpayer's place of residence. Principle of nationality. Taxation is based on a person's nationality or citizenship. Real style. Taxation is based on the income actually received so that the collection can only be done at the end of the tax year, after the actual income is known. Style presumption. The imposition of tax is based on an assumption regulated by law. For example, the income of a year is considered the same as the previous year, so that at the beginning of the year, the amount of tax payable for the current year can be determined. And then, mixed system. The beginning of the year is calculated based on assumption. The end of the year is adjusted to the actual income received. If it is less, the taxpayer must add it, or if it is more, it will be returned. Tax collection system, official assessment system, is a collection system that authorizes the government to determine the amount of tax out by taxpayers. Self-assessment system is a tax collection system that authorizes taxpayers to determine the amount of tax out by themselves. Withholding system is a tax collection system that authorizes third parties, not tax authorities and not taxpayers, to determine the amount of tax out by taxpayers. Type of tax rates. Proportional tariff. The rate is in the form of fixed percentage of whatever amount is taxed. so that the amount of tax payable is proportional to the amount that is taxed. Fixed tariff. The rate is in the form of fixed amount to whatever amount is taxed so that the amount of tax payable remains constant. Progressive tariff. The percentage is getting bigger according to the amount subject to tax. Degressive tariff. The percentage of the rate used is getting smaller in accordance with the increase in the amount subject to tax. Okay everyone, that's all my presentation. Thank you so much for coming. I would like to apologize if there is a mistake. I hope you have a nice day.